Jay, you and I have had the pleasure of getting to know each other over many years now across many investments. Alara on our team has been the person that's really been pushing us to create more content because there's so much that goes on in our business day to day. And I think oftentimes it looks like a black box to people on the outside. We kind of divided, what we wanted to record into topics and people. And for me, it was about people first with you. I wanted to record something with you. And then I had to figure out what the topic was. I think I arrived at a very simple question, which is the following. And you and I have not rehearsed this. Um, we've partnered on several companies. Um, and in most of those cases, I think we were maybe an investor that was one step earlier than you, and you came in. I guess what I'd love to know is our companies that we had invested in arrived at your doorstep, and since then, many have gone on to be really great businesses. What were they missing when they got to you? And what was it that, in your view, needed to be improved or solved to make them even better?
Yeah. So just right back at you, Will. It's like it's been a pleasure every time we do a recurring call to nerd out on themes, observations, what's going well, what's not going well. And we probably have quite a handful of companies and each one has its own strengths and weaknesses. And it's always good to pattern recognize. So continue to want to do more. And it's been a blast. Yeah, I think there's a couple things on the frontline, very tactical side. Then there's things of like alignment around themes, spaces, the level of swing, the outcomes, probabilities, risk. There's all these elements that go into sizing an opportunity. And I think that's one of the interesting things about our firms, which is we think similarly around those types of that kind of scope. So it's been really great working with you guys because when we hear of a company and you kind of present a company to us that you guys have already been invested in, it kind of checks off out of the gates some very familiar themes that we're excited about. For example, companies that are building real system of record types of companies. So we can talk about like a Steelhead, for example, like ERP, system of record, very sticky contracts in a very sturdy customer base. And so I think that themes around probabilities of risk, themes around how predictable the kind of outcomes are. It's not a really big binary outcome. It's companies that we see real customer traction. We can understand the use case and we can understand what a customer value kind of proposition is. So that already is a step on just an initial like alignments on like what kind of outcomes. So not a lot is missing there. It's like already, hey, themes that we already look at. There's also this pattern of, I'd say, this control on KPIs that you guys do really well with, or companies that you guys are partnered with, that they're already great at an understanding of metrics. And that's something that we look at around, do you know efficiency? Do you know how to calculate that, measure it? Do you know what cohort analysis is? Do you have reporting? Do you have a good handle on what's already working, what's not? So that's just a second layer of alignment between our firms that I'll just kind of call out. Your question around like what's missing, it's not really what's missing. It's kind of what we can already identify as working. And then how do we make sure we can be that partner to help accelerate what's already working? It's one of those things around early stage, you don't know what you don't know. So it's not really something that's missing. It's more of an opportunity though. It's like, hey, this company has a set number of customers, set number of, it has revenue, it has a product in market. And that's like a nicely where you guys have gotten involved and they're already at a certain clip. Then it's, can we unlock some element of growth? And that growth can really follow the science of scaling, which is a methodology that my partner Mark has written a lot about, and he just launched this new book on. It's how do we take the steps of the science of scaling and have our companies follow it, right? And everything starts from really great retention metrics, value creation as measured in the form of the LIR, right? The leading indicator of retention. So
Yeah.
what's the true value there? Okay, great. We have initial signs of product market fit, which then you got to move on to how do you scale that now with like really good unit economics, paybacks, et cetera. So we kind of nicely fit within where you guys start and where we kind of continue the journey around that early growth, early scale on how do we take what's already working and what's measured and then scaling it out from there.
Yeah, 'cause, even when you mention KPIs and, we do push our companies to level up their reporting, just as somebody who's now been on a board with you of some companies, seeing what you guys bring to that, kinda like the infusing steroids to, the company's kinda baseline approach to it when they arrive is has been a pleasure to observe 'cause I think we look at the world at the stage where we invest in a slightly different way, which is really around this kind of product market fit question and, largely relying on my partner Andy's background building qualitative market research companies and using that as a rubric for determining, how obsessed is the market with this early product and then trying to put some systems into place. But as I've observed what you guys bring to the table at that kind of round right afterwards, it's just an accelerant across all dimensions of what the business can do. And I've observed it, but I can't really, and maybe, I got to go read your partner's book. Like, I know you guys have a whole framework for how you think about it. And again, I've been the beneficiary of it. I'm observing it, but I don't quite know what it is. Similarly, like you might not know how it is that we look at kind of product market fit from this qualitative research framework. Can you talk a bit more
Yeah.
about how you think about taking these companies and really helping them like everyone uses that word scale, but I
Yeah.
think there's a systematic approach to scale that you guys
Yeah, absolutely. It's
use.
really born out of this belief that there's a science to scaling, hence the title of the book. This dates back a little bit to my Bessemer days. So, a reminder, I was formerly at Bessemer where I was investing a little bit more later stage. So, really got deep into like metrics, numbers. Hence, I kind of take that framework of looking at data, et cetera, as part of our underwriting process. But I was always curious around the go to market scale motion. And my observation was, or my question was, how much of scale is an art versus a science? And I just was like, just curious, like how scalable is it to do that? Hence, we're finding out a lot about it, and we've learned a lot in the last decade of investing. I think as an industry, but also at stage two, and props to my partner Mark, who comes from HubSpot from sales leadership and really codifying the science behind scaling. So it's definitely both, but there definitely is um, predictable, repeatable frameworks around quantifying scale, and it's really centered around answering how fast to scale and when. And I'll talk about that in a second. Just coming back from what you described of the handoff, like what we can't invent or what we shouldn't be the control point on is what is that unique observation in a market, in a customer base that a founder or an entrepreneur has identified. That's the skill set of like super, super early stage investors. So props to you all. Hence, we've been investing together across a number of companies. It's been great to see on your side the companies that you've identified, you've invested in, and then when they come to us, it's a natural progression of like, hey, these are the observations that are working, and then how do we scale that? So it's a great fit for what we do. Yeah. So we're always trying to think, how do we really know we've achieved product market fit? And that's kind of what you were describing. It's always an amorphous definition of, is it revenue? Is it customers? Is it users? Is it, what is the measurement? And then even if it's like revenue, what is the revenue? Is it 100K, a million, et cetera? So we try to distill product market fit from our lens into value prop realization. And that could be in the form of revenue. It could be in the form of, if you think about PLG, it's less of revenue, it's more usage. Every company has a measurement of that. And how do you most quickly identify what it is? And it's usually one specific element. It's usually some activity. It's usually some usage. It's usually some way to know our customers really using the product and getting value from it. And that's a leading indicator of retention, which for us is a really critical criteria for future success. So we always start there, and that's kind of what you've been seeing of us codifying that early on.
I love it because I can pinpoint it. Like I can abstract away, with all these terms, but I've seen it in our companies and I know it hasn't been something that they're as maniacally focused on until you join. And two companies I can think of right out of the gate. You mentioned Steelhead, it was part transfers, right?
Yeah.
Like there was like a metric. And then
Right.
similarly in Rally, all of a sudden I heard Oren and the team talking about studies published.
Yeah.
And it was just simple, right? Like getting back to very simple, basic but the most important thing, like, how can we measure, monitor, improve this thing that we all agree is probably the most important thing related to our product? How many studies have we published? How many parts have been transferred?
Yeah, just to emphasize simple, it should be because it's not just a conversation that a CEO and a board member has to align on. Everyone in the company has to align on that because that's a signal of learning. The
Mhm.
more specific it is, but the more simple it is, the more everyone can rally around it. Everyone understands it and say, how do we tweak to make sure we're either achieving that LAR, parts transfers, studies published, and if not, why are our customers not achieving it? And that's everything from product to marketing to sales to CS, et cetera. So the full gambit needs to be we all need to be aligned around that, from the board to the CEO down to the rep. And I think oftentimes companies have a misalignment of what the front lines may be observing and learning about, and then what the board conversation is. And so that alignment is really critical to get. The simpler it is, the easier to measure. It's, did we hit it or not? It's a binary
Mhm.
question. We should set it so it's appropriately a high enough target, but it's at least very quantified to set. And I think that really codifies, are you there or not?
Are there cases across your portfolio where it's not obvious what that metric is or if a couple metrics are? Like, where there's a big debate, or is it always pretty obvious once you really think about it?
It's pretty clear on a hypothesis of what it could be. And there's usually a variety of them. The hard part is it the correct LIR?
Mhm.
And that does take some tweaking and experimentation. It's always a hypothesis first, but I think when we get involved with the company, we kind of have this kind of go-to-market assessment, and that's really to identify this framework and also push the company to identify, what do you think it is? And maybe it's two of them. That's pretty quick to identify, and I think companies, if they really press themselves, they could think of it. Then it's about measuring, is it correct? An example is, if a company has a set of customers and those that did not hit that LIR, did those companies churn?
Mhm.
Because that's what you're assessing for. Is there a correlation on the LIR as a leading indicator of retention? So you can kind of do some regression analysis to see if you're correct in that. Sometimes, or oftentimes, the first one you pick isn't always the direct corollary, but eventually, if you have that muscle memory of like, okay, yes, that's the type of questions we should be asking, that flips the priority of the company to say, hey, of all the things to focus on, let's try to focus on identifying what is that LIR and sticking to that, and then measuring consistently, frankly, forever. Like, you should always be measuring that.
You talked about the art versus science of scaling. You're trying to basically get to a point where most of it is science. Are there areas of scaling in your view that will always be in the art category?
I think it's people and flavor of leadership is what I've just sensed. Is so there's so many types of leadership out there. We're always learning, how can we be better leaders. I'm always trying to learn that from a variety of contexts, from our LPs, of which we have only almost 1,000 now. I learn every day from them, and like, how do they lead teams? To obviously my partner Mark and our team. I think that's always the eight ball question. It's both the most important thing, but also the hardest thing. And we're still learning, like, how do we identify that? But in, call it, sales or go-to-market leadership, we've tried to avoid the copy paste of like, hey, for a Series A seed company, let's
Yeah.
take some, an established company. That's usually a kind of false positive of success, and that kind of copy paste doesn't always work. So it's like, okay, you balance experience with more ingenuity, and that's where the art comes in. Of like, hey, there might be things we're not yet even thinking about that we need to experiment with. So you kind of need that kind of creative side. So I think that's always the art side of it, of like style, alignment. Is it a very strict, 996 mentality? Is it more versatile, flexible? Even like the notion of, is it an in-person culture? Is it virtual culture? Like, there's a huge debate of that. I think both work. We're a virtual firm. Many firms are not virtual. I think that's all the art side. But I think, to the degree you can codify the science part of it, I think the better. I mean, we're always very biased of making decisions from data and earn your way to growth, earn your way to spend. To do that well, it needs to be rooted in data, and data is all in the science of it. And so that's certainly our bias, and that's kind of where we start. But yeah, I think how do you execute it? Do you operationalize it? You plan for it. It's all a human centric world. And so that art side around style, like that flavor is always going to be an ever moving art piece.
Yep.
Yeah.
Well, Jay, I know I promised that we wouldn't take too much, and I hope we can do this more because I think there's probably 50 other questions I'd love to ask you, but we're trying to keep these relatively bite sized. So
Yeah.
let me just say thank you, and we'll do this again soon sometime.
Yeah. Always fun chatting, man. These are always interesting and ever evolving questions. So yeah, always down to do this again.
All right, Jay. Good to see you.
Okay. Thanks.